Welcome to the Big Biz Show, featuring insight, analysis, and a lot of stuff that's none of your business.
Hold on. This is the Big Biz Show. I think it is their business.
Making the markets work for you. Here's the man with the plan, Sully.
Well, hey there, live from the Loft 100 studios in sunny San Diego, California. Welcome to your Tuesday. Big Biz Show is on the air. Only 4 more sleeps until Memorial Day weekend. Oh, here we go. You guys got any plans for Memorial Day weekend?
Sleep, and
Are you? Is sleep a commodity for you? Like, is that what you like when you're off? Do you sleep?
I love to sleep. I don't get enough of it. I'm traveling all the time with the girls, and I'm working or I'm traveling. So this weekend, I'm doing that.
So what does sleep? So what's sleeping in look like to you? 6:30 in the morning? Or 10?
9.
No kidding.
Yeah.
God, would you?
If I don't have it, set an alarm.
Greg and I get more done between 4:30 and 6.
I know.
If I woke up at 9, I'd feel half the day was gone.
Can we talk about this? Because this is the thing. I wish that I were a morning person, but
Are you
I'm
just not?
Oh God, it's pain
Now, is this
in
happened?
my eyeballs.
Is this happened as you gotten older, or have you always
my
not been?
whole life.
Your whole life.
And it's pain in my eyeballs. It hurts my head. I don't want to talk to
Are
anybody.
you a pop out of bed person at 9?
No.
But at 9 o'clock, are you?
No,
Still
I'm
no.
still like, let's just be on my
You're like the
phone.
off ramp.
Yeah.
Are you on ramping when you go to bed? Or you're phone?
And then I'm up all night. I mean, I'm up till midnight or 1 in the morning because I love it.
Can I tell you a wonderful drug that I found? I'm not kidding, and this is not an endorsement. I took Ambien for about a week, and then I realized I was groggy in the morning, and nothing against the folks against Ambien. It just didn't work for me. And I heard that it was, there was better. So I had a friend of mine tell me, you should ask your doctor about this thing called trazodone. And I said, well, I can fall asleep right here. Put my hands on my head, I'm done.
Yeah.
If I lay down and put my hand on my head, I can sleep on rocks. This keeps you asleep, and you take it when you need it. It's called trazodone. That's the drug name for it.
Mm-hmm. Yeah.
And I take it probably twice a week.
And it helps you sleep.
Because I'm up. What happens if I get up, and me and Mike are on our third pee at 11 o'clock. So,
I do get up to pee a lot.
So, 11 o'clock, it's like, so the thing is that my mind starts going. What did I forget? What do I have to write down?
Yep.
Yes.
I found this meditation, the Sleep Better app that has some Australian psychologist lady talk to
I do those.
hypnosis thing.
Yep.
Calm? What?
No, it's called Better Sleep.
Oh, okay.
So that and a trazodone, man, it might as well be having 5 shots of tequila and a big beer belly bomb.
Works.
Burrito.
I'll
That's
wake
right.
up at 3 or 4 in the morning and not be able to sleep. Same thing.
Do you know who sleeps like a baby?
Who?
Howie Font. Or,
Oh.
what's up, Hal? What's up, brother? Do you have any trouble sleeping at all? Are you a sleep-in guy?
No, I'm kind of like you as far as my morning routine, but pretty good.
Yeah, I
5,
don't.
6, 7 hours, no problem.
I don't want to sleep in the weekends. I want to
Wait,
get
5,
it
6
going.
hours?
What do you got for us today? What's the markets doing today? You talk about your stuff. Let me look at the markets while we're talking about this stuff, because Tuesday, I slept in my car Monday earlier this morning when I looked at the stock market. It sort of feels like we're coming out. The capital markets are opening up. It feels like the market's doing the right thing. It feels also like, regardless of the recession and bad economic advice, traders are still trading in the market. It's a good time to invest. So I'm going to let you talk about that later in the week, but I understand you have something very special for us today.
Well, I don't know if anybody else knows this, but you and I were having a conversation a couple of weeks ago about, whatever happened to, we just talked about a bunch of old companies.
FedMart. Whatever happened to
Handyman.
Safeway? Whatever
Food
happened?
basket.
Food basket.
We had the idea to make it a
Groupon.
segment, and I thought that I would start off by whatever happened to Circuit City.
Oh my gosh! See, I told Howie this is the type of segment that he's going to say something and we're going to go. So what was Circuit City like a Best Buy?
That's exactly what happened to Circuit City.
Yeah.
What happened to Circuit
Right.
City?
We're going to continue this conversation, but real quickly before we go to break, what happened to Circuit City? What's the short straws?
Fries.
The short story is, after operating for 60 years, being the wonder IPO
60
of 1984.
years. Wait, Circuit City
Yeah.
was there before I was born?
It started off as the Ward's Company in 1949, and it ended in 2009.
Wait.
They started CarMax. They owned every Radio Shack and Battery Plus in Canada.
Okay, I'll stay there. This is important. Radio Shack. I miss Radio Shack.
Oh, man.
Do you know why I miss Radio Shack? If I
Lots
need a
of important
fuse or
things.
something, stand by, Howard. We'll be right back. Big Biz Show. Whatever happened to? Whatever happened
Great
to?
segment.
Okay, Howie said wards. Is that like
Monkey Wars? Montgomery
Montgomery
Wars?
Wards. I think so.
Walker Scott?
Oh, wow. You're digging
The
deep.
May Company? Robinsons?
Bullocks?
Oh.
Bullocks?
Oh.
That's Bullocks.
Welcome to the Big Biz Show, featuring insight, analysis, and a lot of stuff that's none of your business.
Hold on. This is the Big Biz Show. I think it is their business.
Making the markets work for you. Here's the man with the plan, Sully.
My dad's got a can of snot.
My dad's a genius.
Throw us in here, Michael.
It is the Big Biz Show. Hope you guys are having a great day. Men and women of the United States Armed Forces, thank you for what you do for us. And we're over 170 countries. All the ships at sea on the American Forces Network. Costa, Maribor, Godwin, Greg, and Sully.
So we're talking about what was it? How did this whole thing start when we started talking about obsolescence? No, that was yesterday. What did you start talking about, Howie? I forgot.
Circuit City.
No, how did we get to Movie Phone, Howie?
Oh,
Movie Pass.
I beg your pardon. Let me pull you back up. Movie Pass. He says, "Hey, whatever happened to the iPhone? Like, Howie, you got to go back."
Yeah.
He's like, Movie Pass. What the hell? You ever heard of Movie Pass?
Oh, the iPhone, ye yonder years of 2007. Oof.
oh my God.
But which is interesting because you realize that the word iPhone wasn't in our lexicon 16 years ago.
Nope.
And the word iPad wasn't in our lexicon.
Nope. Has tablet replaced the word iPad? Like, oh, I'm on my tablet, or is it still iPad?
It's still iPad.
No, they're different things. iPads are the better ones.
It's iPad tablet. Has it always been Mac PC in your mind?
Yes, 100%.
Oh yeah.
Sorry, Greg.
Let's not even talk
I
about the
agree.
people with
I wholeheartedly agree.
No, listen, you're a broadcaster now.
Yes. Wow. This is.
Oh, that's an 8-track tape
Ain't
player.
she a beaut?
Right?
Listen, Buttercup.
Are you allowing this at your table?
This is an 8-track tape player that has the Eagles' greatest hits in it from
This is
1976.
how I roll.
You could hear the song "Take It Easy" and what's the one running down the road? Oh, that is "Take It Easy."
And I watch.
Sounds groovy.
I watch.
Howie, what do you got there for the market today? What's going on?
Yeah, so you were mentioning it a little bit yesterday. I wanted to follow up. The market has done really well, actually, in
spite of
first few
itself.
months of the year, in spite of itself. And that's my point now. It's looking a little flat the last week or so, and the data looks flat going forward because inflation is just not going down. We have the high rates. We've had high rates for a while, and we don't see the inflation print coming down. We are doing some things. The president announced yesterday that he's going to release 1 million barrels of oils from the reserve. That's going to lower oil prices. But when you mess with things,
He also finished the sentence by saying, "Mommy." He also announced he would drop prices. They said, "Mommy."
He says pause.
Sorry.
No, not at all.
I made fun of Reagan the same way. And Trump.
Right. They're all targets.
They're all targets.
100%.
No, they're the biggest target.
This is what's interesting about this is because at some point, we're all fish, right? It's like when you, my best analogy about the stock market is when I used to go to the Charger games, and you'd be on the 15 Freeway South, which is an artery north and south in San Diego, if you're from another city, and you're going down the freeway, and everybody gets in the right-hand lane because you're going to get off on Friars Road to go to the stadium at that time.
Yes, you are.
Well, you can do two things. You can either go and realize where you live in the city and realize there's 2 lanes and go all the way up to the front, save yourself a half hour, and just go off. Or if there was just 1 lane, you do what I call a snake and brake, which is,
Yeah.
I think we all know
Yes.
about do the snake and brake.
Sure.
And
Stressful, but I love it.
but it is. And the interesting part is we're fish in terms of how we invest. We're fish in terms of what line we get in. We're fish in terms of what we think the status quo is going to be. And I think in the terms of this inflation, yes, this economy shut off like a light switch. It's going back on like a sunrise, and a slow one at that. And at some point, just like you get investor fatigue or donor fatigue, you talked about the election, there's donor fatigue into, I've already given money. There's investor fatigue in terms of I'm not investing any more in that company. I'm tired of waiting. I think there was an inflation fatigue here because, yes, much like the Great Correction or the Great Recession, okay, we as business owners had to fire people and do the same with less people. Guess what happened when the economy came back? And it came back with a storm. We didn't hire people. We just made more money. This inflation thing is sort of the same way because we have inflation fatigue because we're used to paying the higher prices now. We've already made concessions in other parts of our lives. We don't have to go to dinner as much. We don't get coffee as much. We don't buy as many Red Bulls and a Slim Jim as much.
Dang it.
And we've realized how we can live through this inflation. So, we may as well, look at it, now I've kind of got this managed, let's start investing again. And suddenly we're seeing the investment. And keep in mind, only 43% of Americans invest in the stock market. 100% of Americans participate in the economy. You see the difference there?
Yeah.
So the economy is a great indicator, but as far as the investment world goes, Howie, I think you're absolutely right about picking up on what we talked about the other day, and that is the fact that investors are fatigued of sitting on the sidelines.
For sure.
So why do you suppose, look at, you and I are not moving the needle on Apple because we invested, even if we're dollar cost averaging every day. None of us are. Institutions are. But why do you think the institutions started getting smart and ignoring the open air indicators at the Fed? Because the Fed is really the one saying, look, we still have high spending and high inflation. Until we can knock the spending down, let's raise interest rates up because people won't spend as much if their credit card interest rates are higher. I mean, that's sort of the idea there. Why do you suppose institutions are ignoring that and going back in? Because institutions are the ones moving. The institutional investors are the ones that are moving the needle on this market.
Look, half the story is definitely what we've just been talking about. Opportunity costs. We got to get invested at some point, and it's leaving money on the table. But the other half is it's probably going to be okay, but probably means 60%. Most investment banks, JP Morgan came out with a note yesterday that said 60% chance soft landing. Soft landing means, yeah, the market doesn't do great, but it doesn't do horrible,
or when Mike
and then it starts to grow
and falls on the couch. Howie, you broke up there for a second. Tell me, right before you said 60%, what did you say there for a second? Your feed broke up. Tell us the moral of the story one more time.
Sorry about that. Investment banks, JP Morgan came out with a note yesterday that said 60% chance of a soft landing.
Why, now, why? But why so? Right before that, you were telling us. Why do you suppose they did that?
Well, there's a lot of. We're in a really flat environment where for every negative thing, for every, they're cutting in half the size of hoagie sandwiches. There's another thing that says Target's lowering prices on a few goods. So we're in a kind of neutral state, and no one really knows. You know that because JP Morgan is giving you basically a coin toss on the economy. 20 to 60%.
Howard Font.
Landing. Yeah, but when Target lowers price on.
Go ahead.
No, when Target lowers a price on a few goods, are those the important goods, the goods that are really going to matter to us?
Well, what matters to you?
I love them.
Consumers?
What matters to you?
Maybe household items. Maybe now they sell groceries there at Target.
What about gas and food?
Gas and food as well.
Which is not part of the CPI, Consumer Price Index. It's Consumer Price Index is just how much prices have gone up since yesterday or last month.
Right.
Stripping out food and gas because they're so volatile.
Going back to the Target though app, I'm on my Target app daily, and I'm ordering because you can drive up, and
wait.
I care.
Oh, because you park in?
Yes, and it's not. No, I just park and I bring it to my car and I order it.
Pretty soon you're not gonna have any bones. You know why? I mean, pretty soon we're just all gonna float.
I know.
We don't have any bones, no muscle. We're just gonna float because we just drive. We don't get out of the car.
Bunch of circus freaks.
I love. First of all, is there anything more satisfying than pushing a Target cart? You follow what I'm saying?
Oh, especially down the.
First of all, the handle is this thick. It's like
ergonomically correct. It's a very nice cart.
It is a nice cart.
Yes. Yes.
And my kids just got the cool cart. They had the double cart.
Right.
For the two kids.
Yep.
They had to be able to,
That's hard to
back that rig up and move that. But the thing is, they're just like sturdy. You could live under one if you had to.
And they have the cup holders you can attach to the side and put your Starbucks in.
Exactly right. Or a Starbucks cup with your choice of beverage. But I have no idea how we got there. So tell me, anyway,
I care when I see the little red line saying that there's a sale happening on a product that I purchased.
When did this happen?
I do.
When did this happen? Has it always been
So they just rebranded. Their red card is now the Circle card now, or maybe it's vice versa. I can't remember now exactly, but they rebranded. The Target lady from Saturday Night Live is now their face.
And how much are you saving on these red lines?
I don't even know how much it is. I just love to. It's pennies, probably.
Is this the same woman that doesn't want to do this anymore?
Yes. Yeah. Yeah.
So you have to go to blowout? For how much money?
I don't do those. I don't do those, okay?
I thought you taught us
Weeks
about
ago,
the blowout.
you told us about the
I
blowout.
know they exist, but I take my daughters on the day of her prom. I don't go regularly.
I thought you were, okay. Right.
No.
My bad. So are you a coupon clipper?
No, but in my Target
Are you
app,
a Yankee clipper? Yes, that is a ship. It's a ship.
I'm like, I don't think I am. I need to pull up this app. You guys, it's exciting when they show you things on sale.
Right.
This is where I'm a clipper.
Was this exciting when you were 20?
Yes, I'll tell you what was exciting. When I was at Borders Books and they said buy 4, get 1 free, I went in for 1 book, but I would buy 4 just to get that 5th one for free.
Damn.
We're making money, honey.
Yeah.
I bought 4 pairs of Gucci shoes today.
Yep.
And
The 5th one was free.
we made $2,000.
It's real math. It's real.
We made $2,000. Listen,
It's fully real.
I'll let you say that because your razors cost 30% more than our razors do. Did you know this? That women's deodorant, women's razors, women's goods that we have the same of.
Yes.
Bic Blue Razor, Pink Razor, cost
It's
30%.
more money.
Their beards are so
Did you
much
not know this?
heavier.
Yes, they are.
Oh, great. Now this is your next thing.
And now my girls buy the flamingo.
Yeah,
with
well,
the
the point-
special thing. And now they're
the
three
point is,
times the size.
no, listen, go look. Go
Okay.
look at the same. We have the same products in some categories.
See, that stuff I don't notice, but I like my red
I also
Target
can
sale.
we talk tomorrow or later today about shadow inflation?
Yes.
Remember when the toilet paper roll was this big? Not anymore.
Yeah.
Remember when there was this
Hello,
many
summer
chips?
sale.
Now there's this many chips?
Shrinkflation.
Oh, here we go.
Hello, summer sale. When am I gonna get to
Wonderful
it?
time.
It is the Big Biz Show. Wherever you watch, wherever you listen, as always, we appreciate you being along for the ride. Here in sunny Southern California, Costa, Greg Todoroff, our executive producer, and that guy right there, Sully.
Let me tell you the sound you're about to hear. Yeah, that was the market opening today.
Ooh.
Frankly, 3% down after the Nikkei index was down 11 or 12% overnight. Europe was down 3%. Just a crazy day, and this is what it comes down. We start off with the jobs report in the U.S. Start off with a number of things in a global economy. The market's been ripening all year. We're at all-time highs in the last couple of weeks. And the problem is that the Fed has taken so long to pull interest rates back that they may have waited too long. So the good news is they'll probably pull interest rates back 0.5 percentage point, okay, for 50 basis points coming in September. But is it too little too late? So we're seeing a full-blown meltdown across the board. Every single market, you're talking about everything from the Russell 2000, Dow Jones, NASDAQ, S&P, small cap, micro cap, bulletin board, pink sheet stocks, everything in the market is down as a result of this. You heard Howie say. I mean, look at Berkshire Hathaway on Saturday disclosed it sold half of its stake in Apple. Half of its stake in Apple.
What?
Okay, I mean, and they say it was tax purposes, but the bottom line is, boy, wasn't the timing interesting, right? I mean, the long story short is, this is just one of those things where I believe politically this is going to help the right versus the left, because this economy has gone to the point where now the market's not even doing good. The market was the saving grace. In any case, yeah.
So is it recession? I mean, are we?
You never know you're in a recession until you're out of recession. Two quarters of declining growth has been the definition of recession forever. So by those notions, we've been in a recession for a couple years now, ever since this administration.
So what was the trigger? The jobs report?
I think it was a number of things. You had an unemployment report come in. There was an earnings report last week that looked kind of stinky. Look, the market runs on fear and greed. It's two emotions, okay? And what's happening here is we've got a fear-based thing. You'll watch what happens, though, in the next few days. You're not going to see a recovery, but you're going to see what's called a dead cat bounce. I mean, we saw a big drop today. Next couple of days, you're going to see a bounce again. I don't think this puts us into a bear market, but I think what's, I think that recession. You're going to hear the word recession come up, and you're going to see investors putting some dry powder away just in case. And I think that's exactly what's
Well,
going
thank God nothing's going on in the Middle East right now.
Yeah,
You know what I'm
exactly.
saying?
Yeah,
We can just focus
and we
on
have
the
an
stock
election.
market.
And we have an election.
And we have an election.
Hey, our good friend Christian Kanstrup, he is the CEO of a company called Evaxion. EVAX is their stock symbol. We've had Christian on a number of times. Really interesting company. We're going to be covering him on a regular basis. Clinical stage tech bio company based upon what's called an AI immunology platform. So they're saving and improving lives with AI immunology. And here he comes via Zoom to you right here on the Big Biz Show. Christian, how are you, sir? Rough day on Wall Street here in the States, as you've probably already seen, but you still have your head down working on saving lives. So talk to us again, for the people who haven't seen you before, exactly what you guys are doing there at Evaxion.
Yeah, first of all, great to be back, Sully. And you can say rough day on Wall Street, but probably not as rough as it was in Tokyo this early morning. So it's putting things in context. But what we do at Evaxion, that is saving and improving lives with AI immunology. Our purpose is to use artificial intelligence and machine learning to discover, develop, and design vaccines towards cancer and infectious diseases. I mean, the company here was founded in 2008, even before people were talking about AI, as a company focusing on using machine learning to decode the human immune system to develop novel therapies towards serious diseases. And that's what we have been working on developing and further improving ever since. And today, as you say, we are a clinical stage tech bio company. We have a clinical stage cancer pipeline of personalized cancer vaccines. We have a preclinical pipeline of novel vaccines towards various infectious diseases with high unmet need and where no vaccines are available today. So working on saving and improving lives, utilizing our quite unique validated AI immunology platform. So that's in short what we're doing, Sully.
Hey, Christian, my question for you is when you talk about machine learning and you talk about your development for metastatic melanoma, can you describe kind of how that works from start to finish?
Yeah, I mean, what we have been working on is developing a highly sophisticated AI-based platform which, based upon a tumor sample for the individual patient, can identify exactly which are the elements that needs to go into a vaccine designed specifically for that patient. So you should look at it as we're utilizing the power of AI and big data to develop personalized vaccines specifically designed for the individual patient and thereby making them more effective. So that's the simple principle, taking the outset in the individual patient and developing a vaccine specifically designed for that patient.
Christian Kanstrup is the CEO of Evaxion, their ticker symbol EVAX. Christian, using AI, does it allow you to, I guess, cut down on the man hours it would take, maybe allow you guys to research farther, go farther with what you want to do with immunology if you weren't using it?
You can say the hope and also what we are working on proving is that we can do it cheaper, we can do it faster, and we can do it with lower risk. Of course, by utilizing AI, you can say that the development of a new vaccine, which if you use traditional methods, if you look at, for example, for a vaccine for infectious diseases, typically it takes 3 years to identify a vaccine target for infectious diseases. We can do that in just 24 hours.
Wow.
What our AI model also does is it ranks the output of the individual targets for the vaccines, and thereby we can select the ones that we expect to have the highest efficacy, and we can even discover targets you can't do with traditional approaches. So in essence, it's about being able to do it cheaper, faster, and with lower risk. And that's super important because even though traditional drug development have developed a lot, you can say we are not there yet where we can, by traditional methods, design and discover novel vaccines that are effective. So there's a significant unmet need, which we are aiming at addressing, utilizing AI, machine learning, and all the big amounts of biological data that's available today.
Hey, Christian, real quickly, before we get out of here, I want to talk about the Merck collaboration real quick, but is that one of the biggest pieces that's happening in the next 12 months with you folks?
Well, you can say we started collaborating with Merck on discovering and developing a novel vaccine for a infectious disease, a bacterial infectious disease. That is ongoing, and we are concluding on the first part of that during the second half of this year. What we also did see is that Merck joined us as shareholder and are our single biggest shareholder today. So I would say the combination of having Merck in as a shareholder and at the same time collaborating with them, that's of course an important thing for us. But we are also having 1 year phase 2 data coming out on our most advanced personalized cancer vaccine in metastatic melanoma here in the third quarter, which is also going to be super exciting.
Christian, thank you so much, pal. We'll talk to you next week. Christian Kanstrup is his name. EVAX is the stock symbol, of course, name of the company, Evaxion, E-V-A-X-I-O-N. You can go to evaxion-biotech.com. More big biz coming up. Stand by.
Loft 100 Studios, The Big Biz Show, our affiliates, and our hosts are not registered investment advisors or broker-dealers.
Our show hosts make no commitment that the purchase of securities of companies profiled or otherwise mentioned in our programming
are suitable or advisable for any persons, or that investment in such securities would be profitable in general.
Given the nature of our company's profile and the lack of an active trading market for their securities, and investing is highly speculative and carries a high degree of risk. We profile selected publicly traded and privately held companies on our program.
Most of these companies that we profile have provided compensation to Loft 100 Studios and its host for the profile coverage.
3, 2, 1. From time to time, we sell shares of the companies profiled in the open market that we receive as compensation for coverage of client companies.
But never sell stock if we are speaking about, interviewing, or covering a public company who has paid compensation.
Specific questions on compensation can be obtained by contacting producer at sullyandgroup.com.
Listeners should verify all claims and do their own due diligence before investing in any securities mentioned on this program.
Investing in securities is speculative and carries a high degree of risk.
We encourage our investors to invest carefully. Duh.
And read the investor information available on the website. On the Securities and Exchange Commission, SEC, at www.sec.gov.
Or the Financial Industry Regulatory Authority, FINRA, at www.finra.org.
In over 175 countries and all the ships at sea on the American Forces Network, it is the Big Biz Show. To our brave men and women of the United States Armed Forces, for what you do, we always salute you, Costa, Greg Todorov, and Sully. Look away today. Just look away. Your screen is bleeding. You have to. I mean, there's days like this. You know, market is topped out in so many different areas, and when you see, like when I'm looking at my my app online here, and you see just the
glowing in red.
Oh boy, it's literally bleeding. And you know the issue is this: is that it's based upon fundamentals. Markets having a meltdown today. This is a snapshot in time. You have to sort of think back on during the Great Recession, when the Dow Jones hit down. I think I can't remember, it was 46 or 64 or something like that. But it was. But if you look at it today, and you know, if you think to yourself, boy, what a bargain that was if we would have bought back then. You have to sort of think the same thing right now. If it was a bargain back during the Great Recession, it's a bargain now.
Yep.
Not suggesting that you know, just because something's cheap doesn't mean it's not going to get cheaper. I would say you have to wait. There's a saying called the trend is your friend. You have to wait till things start trending back up. I think you're going to see a bounce here in the next couple of days because you can't just lose this much market value. You know, we opened 3% down today, and there's been stops and there's been curbs and so on and so forth, as Howie was talking about earlier in the program, and that's to sort of keep us all at bay here. But we've been at all-time highs all year. For perspective, today's down market puts us back where we were in May. Put it that way. Okay, so we lost a month and a half worth of gains. Okay, so far. Or actually, let's say two and a half months worth of gains. But bottom line is, you know, big tech had a comeback, and 7 companies were never going to carry the entire market forever, which they have, and that's what's going on. Biotech sector is getting their butts kicked, and everything else is kind of going along with it. So this is a snapshot in time. This is the day you don't look at your market. Don't look at your 401k today. Yep. Just look away for the day. Joe LaRosa, good friend of the show, founder and CEO of a company called LaRosa Holdings Corporation. LRHC is the stock symbol, LRHC. You can go to joinlarosa.com. Really interesting company that's disrupting the real estate brokerage model, starting in Florida, now taking the world by storm. And he joins us here once again via Zoom. Joe, how are you, sir? Good to talk to you, man.
Hey, doing well. Appreciate you guys having me on.
Hey, listen, talk about, give us an update, kind of what's gone on this year with you guys, because you guys have made some pretty significant changes, even since when we met you in the beginning, with respect to some good news coming out, subscriptions with respect to brokers signing up. Probably subscription is probably the wrong word, but people signing on with you. Talk about the entire picture for 2024 so far.
Yeah, listen, 2024 has been a great year for us. I know it's been a little bit of a kind of a slower market for a lot of other real estate folks, but in these down markets, the way our model is, we've actually been able to grow and be able to actually expand into multiple markets now. So we've actually had 11 acquisitions that we've actually done since our IPO closed back in October of last year. Our agent count is growing, so where most real estate companies are actually seeing a decrease in their agent count and decrease in volume. Our revenue numbers have been going up. Our agent count has been going up, in fact, in the month of June. And so far, July looks to be pretty much comparable to what June was. One of our best months in the history of La Rosa. It's because of the model that we have to offer, really offering agents an opportunity to really capture as much of their commission as possible.
Hey, Joe, I want to talk about when you and I talk about the word disrupt, like we did when we first met, what you're doing to disrupt the real estate industry. Be specific about that for folks who haven't seen you, because we picked up some new affiliates and actually moving more internationally for Bloomberg EU coming up in the weeks to come. And I want people to understand exactly what you mean by disruptive and how it changes things.
Yeah, so our main core business, again, is a real estate brokerage model. So we've always wanted to become the Netflix of real estate. So for many years, these broker-centric models would basically take 30 to 40% of an agent's commission. So we didn't invent the idea of offering 100% to commissions to agents. We actually found a way to disrupt it by adding a lot of value. So back in 2011, we had great success with that. In 2023, 2024, when we went public, we started then to introduce a revenue share model that has become very disruptive in today's real estate industry. So, with the revenue share model and offering 100% commission, we really stand out as a tremendous value proposition and value offer to agents. And that's why even in a slower market where you've seen less transactions closing, agents are wanting to find a way to keep more of their commission. So that's why we've been able to really become a disruptor in the real estate space, where, again, most real estate companies are seeing a decline in total volume, a decline in agent count. We're actually seeing the exact opposite.
Joe, we've never discussed this. What color blazer do your agents wear for La Rosa Holdings?
Well, listen, everyone's going to go off the leader, so it's very rarely that I'm actually wearing a blazer. So if we had to choose a color, I'd probably say blue.
You took a wheel, and it sounds like for your new agents and agents that you added a bunch more spokes to make them successful. Is that the way you can boil it down?
Yeah, absolutely. We wanted to really focus. My father always taught me years ago, you want to have multiple streams of income coming in. So we wanted to create an opportunity for agents to really earn revenue 7 different ways. So we really focus on being able to educate our agents on how to, grow a business within a business. And that's what we offer them here at La Rosa.
Hey, Joe, I want to talk about markets today, not specifically with respect to stock prices, but I want to talk about the fact that one of the reasons the market's, swooning today is just folks are thinking that the Fed took too long to reduce interest rates. Obviously, when the Fed reduces interest rates, it doesn't automatically affect the mortgage rate because mortgage follows the long bond, but it's coming. In your opinion, because you're at the tip of the spear there, are we looking for better mortgage rates sooner than later now? Because everyone's talking about 50 basis points to 0.75 basis points in September. What does that mean for you, and what does that mean for your projections with respect to the national real estate market and mortgages?
Yeah, great question and great point. I think there's a big wave coming. And so if you look at the last 30 to 45 days, we've seen obviously a slight decrease in mortgage rates. We're always going to follow the 10-year Treasury. And, it's been below 4% now for the last couple of days, which is great news for us. I think as you continue to see that number drop, you're going to see mortgage rates drop. So, once the Feds do cut rates, obviously that's going to have an impact. It's going to be a domino effect. And, I expect a very similar wave to what we saw after COVID. During COVID, everything kind of shut down. Everyone took a timeout. And then once things started to get going again, especially in markets like Florida and Texas, you saw a huge pent-up demand get released. And I kind of expect the same thing to happen probably towards the later half of this year, going into 2025 for sure.
Joe, so that obviously the next question is, what does that do for you for the rest of the year? Do your plans change at all, or is it accelerate things? Because days like this obviously are tough to look at, but every single time we've had days like this in the past 15 years, it turns out to be actually something better, an opportunity in the weeks to come. Talk about what you're thinking about for the rest of the year now, based on what we're seeing with mortgage rates and what we're seeing with the market today.
No, listen, you know what? It's kind of ironic that we went public in some of these challenging times over the last 12 months, because when we launched our company, we launched in one of the greatest real estate recessions ever, I think, in the history of our country. So, look, I've always been focused on just positioning yourself now for the future. And that's what we've been very, very aggressive, with our acquisitions, increasing our agent count, being in the right place at the right time so that we're well positioned now. So when the market does turn, we're going to be able to receive, all of that demand that's going to get released back into the market. So, we're very excited for what's coming. We're obviously still focusing on our acquisitions. We have several more that are lined up between now and the end of the year.
Wow.
And because of days like today, yeah, absolutely, we're getting more opportunities kind of come across, our desk, and we're taking a look at them and seeing kind of what's the right fit for the company moving forward.
Joe, I get emails from you every time you're on there. Last thing I'm going to ask you before you take off here is I got people in 50 states emailing me wondering when you're going to be in 50 states. Is that sooner than later? Because I think they want to see you in places like California and Arizona, stuff like that.
Yeah, we're expanding. So, we have some big news coming out very, very soon. It's going to allow us to be able to go into now, I would say, twice as many states as we're currently in today. So we're very excited for what the second half of this year is going to have for us.
Join LaRosa.com. Thanks, Joe. Appreciate it. We'll talk to you next week. We're going to get him in the studio here. At least I'm trying. Yes. Joe LaRosa, founder and CEO, LaRosa Holdings Corporation, LRHC, stock symbol LRHC. It is the Big Biz Show. Thank you, as always, for being along for this joyous ride. I am Costa. That handsome man right there is Greg Todorov. He is our phenomenal executive producer, and that guy right there is phenomenal, period. Sully. Let me tell you about the economy.
Please do.
So you see market at all-time highs up until last Friday when we had a correction on Monday.
Mm-hmm.
In the meantime, CPI, Consumer Price Index, is dropping down to 3%, which is basically the core rate of inflation. Core rate meaning that strips out gas and food.
Okay.
Which is a meaningless number, because what do we all care about? Gas and food, right?
Sure. Right.
So here's the interesting part of this. You guys were like whining, like, dare I say, redheaded stepchildren, because I have a stepbrother who's redheaded, I can say it.
Okay.
I do. About $3.25 gas 18 months ago.
Yeah, we were.
What are you paying now?
$5.47, $5.48.
And you are, what are the words three words I'm talking about here? You're used to it.
Oh, we're conditioned to it.
You've accepted
the new normal.
Yeah. It's the new normal. Joining us now, one of our good friends, Patrick DeHaan, has been on the air with us for several years now, head of petroleum analysis for GasBuddy, GasBuddy.com, home of the gas price temperature map. Can we start by showing that temperature map before we show Patrick? Because I just need to vomit my mouth a little bit when I see what California is doing. Have you seen this gas price temperature map? It goes from purple to yellow. Okay?
We're on fire. Look.
Purple is the cheapest gas in the country at an average price per gallon of $2.61. Our average. This means if you drive out to Yuma, California,
yep,
you drive out to Truckee, you're going to get $4.27 a gallon.
I was just in South Carolina a couple of weeks ago.
Patrick, how are you, brother? Good to see you, man.
Hey, good to be with you.
It's not looking any better for California, but overall, talk about what we're looking at here with the CPI number coming out, showing inflation's being tamed, but they're leaving out food and gas. Food and gas. By the way, you look fantastic. I don't know what you're doing, more push-ups or something, but you're a shadow of your former self.
The gas prices are a bit less stressful this year than they've been the last couple of years.
They're so stressful you can't eat. So talk about that. What's happening on a national basis?
Yeah, that or maybe it's food prices, right? So I'm trying not to buy as much. So one of those two things,
spending money on gas, which makes him sick, and he can't afford food. Perfect. Doing a great job.
That's right. It's kind of nature's weight loss. But to your point, we've seen a big drop here. California, 47 cents lower at the pump today than a year ago. Collectively, Americans spending about $125 million less on gasoline just today compared to exactly a year ago. So we've seen a little bit of improvement there. And a lot of this really has to do with some of the CPI numbers that you had mentioned. The Fed has really been at work here to slow the interest or slow inflation down through rising interest rates. That's taken a bit of a bite out of commodities and caused prices to go down a bit. So a little bit of this is simply getting beyond COVID, the imbalances. A lot of people are traveling the last 2 years, not so much this summer. more Americans traveling overseas. So demand for gasoline is down, coupled with weakness in China that may actually spread to us now. So a little bit of economic weakness peppered in to what we're paying at the pump, but no refinery issues. And for California, that's a big deal.
Well, let's talk about California because, well, we're in California. It's like when we talk about the NFL. We have nothing to talk about because there's no team here. Thanks, Alex Spanos. You're dead to me. I want your family dead. Your house burned to the ground. I didn't say that live on air, did I?
No.
I don't want his family.
No, you're fine.
I will tell you this. We pay what, 87 cents per gallon more in California, just in environmental fees on top of taxes and stuff like that.
Yeah.
There's also the summer blend, the mythical summer blend.
Right.
It's like the mythical 5G that they get to charge us more. Is that ever going to even out here in the western states? And by the way, and will we see some of the other states that are blue-friendly states start adding on environmental fees like you've seen in California? Like, in other words, are we going to see places like New York? Are we going to see other places do that? Because that's, I can see Oregon doing this. I can see Washington doing this. It's a little scary.
Yeah, Washington's already doing it, and there's already been outcry from the cap and trade program. Now, California engineered the cap and trade program. It's been in use now, I want to say, for probably 10 or 15 years, that cap and trade and its low carbon fuel standard, right? So California's got like a buffet of extra fees and taxes, and everyone else is kind of like, we don't want to gain the weight to tie everything back to food again. But yeah, there are some states, Illinois included, where I am, Illinois, New York, California, those blue states do tend to have higher taxes, fees, regulations, whether it's low carbon fuel standard. But I think with what's happening, there's probably going to be a little bit of a turn here. People know California is top dog when it comes to gas prices. By the way, Hawaii actually is top dog today, taking California's title. But to your point, I think a lot of taxpayers in other states are probably going to be a bit hesitant when states bring this up, and expect political pundits to certainly draw parallels to California. Should these issues come up in areas like New York and Illinois, I would look for hesitant consumers knowing what it's done to California's gas prices.
Yeah. Patrick DeHaan is the head of petroleum analysis for GasBuddy. He's with us here on the Big Biz Show. Patrick, do electric vehicles and the more they're out there help us as far as gas prices, or do they affect it adversely?
Is there a net zero? Because there's an argument for a net zero.
Well, it's going to be lumpy. That is, you would expect, well, hey, gasoline's going to be declining, right, with more electric vehicles. But the thing about it is the refineries are going to look and see the writing on the wall. That is, are they going to continue investing and maintaining and expanding? Well, they're not going to expand, but are they going to continue investing in maintenance in their refineries if they see that gasoline demand is declining? And that's, by the way, part of the reason why there are fewer refineries in California, because, hey, if you're not going to use gasoline, it doesn't make any sense to keep a refinery open very long, right?
But Patrick, how do you look at gas prices and food prices? May as well be a tax. You can't avoid it. You got to pay for food to put food on the table, and you got to go to work. How do you decline, or how do you make gas usage decline in where 47 of the 50 states are legitimately commuter states?
Yeah, absolutely. And look for more incentives. I mean, California's been playing that model, right? Incentivizing EV purchases. But the thing about it, too, is when California's also telling people, hey, don't charge tonight because there's not enough power in the grid, there's a lot of worrisome signals here, right?
That's great.
So,
yeah. It's going to be a sweaty night, Mike.
You got to mention it. If you're in the middle of a hurricane coming at you and the state's like, hey, can you wait on charging? And you're like looking around like, no. Yeah. This is where liquid fuels really comes into play. And I do think that there'll probably be more incentives. Now, a big part of this conversation, too, I'm not going to get into the political weeds, but depending on which way the White House goes, there's going to be a big difference in policy on EVs versus internal combustion engine vehicles, or is there not? I mean, Elon Musk and former President Trump seem to be buddying up, so maybe there could be some developments there. But a lot of this is going to be policy fueled.
The other piece of it, too, though, is do we have the infrastructure to have 2,000 EVs on the Golden Gate Bridge? Nope. Will it hold it when each EV weighs 8,000 pounds? Patrick, thank you, brother. Good to see you. We'll see you very soon. Patrick DeHaan, head of petroleum analysis at GasBuddy. Just because oil prices go up does not mean gas prices go up.
Right. It's the refineries.
Oil to a gasoline company is like potatoes to McDonald's.
Yeah.
It's making French fries. French fries don't go up because the price of potato goes up. Competition does it. See what happens. That does it for us. Big Biz Show, bigbizshow.com. See you next time.